Okay folks, welcome to this week's weekly index review from Magnetic Trading. My name is Mark Austin and I'm going to be taking you through today's presentation. So what are we going to be looking at this week? We're going to be giving you a review of our advisor program. So remember, the advisor program delivers the trades that we take on our own trading account here at Magnetic Trading, which is up over 200% over 5 years. So what we do is whenever we take a trade, we deliver that buy or sell trade via the app, which sits on our client's phone, and then they take the trade if they want to as well. So we'll see what happened last week. We've been giving you updates over many weeks now. We're also going to give you the insight into probabilities. So we're going to give you a vital piece of information that will help you going forward and help you also plan within your own trade plan. So it's something that a lot of people don't understand when they come into the world of trading. We're going to give you a recap of the FTSE expiry. So this is a high probability trade that we take each month. We have already given you some insights into this trade, but we're going to recap the details of that and see what happened just on Friday. And finally, we're going to give you some information to take away for the rest of the week. It's going to be some analysis and some key levels and what we're expecting from the FTSE going into the rest of the week. All right, let's kick off to see what's been happening on our own advisor program. So this week we actually have to report we had 2 losses. So we've been reporting wins and wins every week, but this week we did actually take some losses. Tricky week in the trading markets. It's been coiling, so the markets have been consolidating in a very tight range and really haven't given much directional clue as to which way they're going to break out. So we took a trade, I think it was on Wednesday, and we risked 1% on that particular trade, but we ended up losing only 0.3. So how can we do that? Well, we went into the trade with a stop, but the price action was not favorable, so we decided to cut some of our position and then ultimately come out of the trade early, which resulted in just a 0.3% loss. So it's not all about just placing a stop there and allowing yourself to lose 1 or 2% on a trade. We will intervene if the trade doesn't look right. The other trade, unfortunately, that lost was the FTSE expiry. Now the FTSE expiry has a 90% hit rate. It's just one of those 10% that lost, unfortunately, this week. Okay, so something to take away from probabilities. So if you've got your trade plan, you need to understand that if you've got a 70% win rate, so Magnetic Trading hovers around the 70% win rate on the trades that we take ourselves, but we know that for a sample size of 200 trades, that one time there's going to be a run of losses of 4. So that means we know that over 200 trades, we know to expect we're going to get 4 losses in a row. Now sadly, a lot of people that come into the trading world, if they get 4 losses in a row, even if it's a really good system, they will give up because they can't accept getting those 4 losses in a row. So it's not going to happen all the time, but you must plan for that. So there's no point in risking 5% per trade on all the trades that you take, even if you've got a really good system, because you can't beat probabilities. So you must have that put into your trade plan so that it's not a nasty shock when it does happen, and it will happen at some stage. Okay, so we're going to cover what happened with the FTSE expiry trade on Friday, and for those of you who are new to these weekly videos, we'll also give you a recap as to what's going on with that. Okay, we're looking at a FTSE chart here. So this is Friday's action on the FTSE. So this was the 10 price. So every 3rd Friday of a calendar month, the FTSE will have a options expiry. If it's a quarterly month, it will have futures as well at the same time. We call that triple witching. But it lasts for 5 minutes. So between 10 past 10 to 10:15, the options will expire, and sometimes the futures if it's triple witching. So during that time, we're expecting volatile action. So we're expecting quick moves to the upside or the downside, and there's a high probability that the price action will retrace back down to the 10 past 10 opening price at some stage. So what we do is we go in, we sell or buy at a particular point in time, and then we have a proprietary stop which we use to determine when we want to come out of this trade. So for this particular trade, it opened at 63.30, and we viewed that selling the market if it got up to 62.60 was okay. We actually really wanted to buy it as well. Had it spiked down, we would have bought it around 15 points because the trend is up and the market had already corrected in the morning. So it had been a downtrend all morning, coming down. So had it spiked down with the trend up, the buy would have been really nice, but it didn't. It spiked up, and quite a lot of volume came in actually. We entered it here at 62.60. It actually went higher, almost got up. It got up towards the 62.80 for this particular expiry. We don't generally get such a big expiry in July. Usually it's triple witch, and we expect a really big move. But this one did actually move quite high. So we're in here, we had our risk based on 30 points. So we had our stop at 62, based on 62.90. But once we got into the trade, we decided to have it above 62.80, but then I actually changed it back to 62.90 because I thought the market might just clip this area here. Anyway, it spiked up and then it moved back down. Now it already retraced quite a bit. So from near the 72.80 levels, it moved all the way down to the 62.51 levels, but it didn't go back down to 62.30, which is where we expect it to go. Instead, it started to build, and it got up above 62.90, and it's really done nothing since. Actually, it's just been hovering. So we'll see what happens on Monday, but certainly if it fails to get above the 63.20 level, which I'm going to talk to you about in just a second, then there's a good chance it can still really come back down to 62.30 and fill this market inefficiency. So what do I mean by market inefficiency? Well, this quick move up here, there really hasn't been much trade facilitated. So there hasn't been buyers or sellers matched up. And that's what markets exist for. They match up buyers and sellers. And if there's an area in the market where buyers and sellers have not been matched up, then it will likely come back and fill that area. So that's why we like the expiry trades, because it's linked to how markets operate in the first place. So we'll see what happens on early next week, but keep an eye on that 63.20 and 62.30 level. In fact, I'm going to talk about the 63.20 level just now. Okay guys, hopefully you enjoyed that. So going into next week, what to look for. So 63.20 is really important for the FTSE this week. So if we get a clear break of that level, that opens up a nice move to 6,400. But remember, that market inefficiency does still exist on the FTSE down to around the 62.40 to 30 level from expiring. So yes, I still am expecting that to hit at some stage. So certainly if it fails to get above 63.20, then I think we're going to go at least down to 63.30-40 this week. And then if it does get back above 63.20, then that will be a really good buy signal. Okay guys, stay safe out there, and hopefully we get some really good trades for you this week.